Hello, and you're welcome to this special episode of Global Business Insights on today's United States Federal Open Markets Committee decision. That's the FOMC and the press release that just came out. The Federal Open Market Committee announced today that it has decided to maintain the target range for the federal funds rate at 5.25 to 5.5% and will reduce its tapering of the balance sheet, also citing lack of progress in inflation. Before the FOMC press release, traders were seeing a 50% chance of a Fed rate cut taking place as early as September and just 1/4 percentage point reduction by the end of the year. But the Fed is data dependent and will be advised more by the trends in inflation, jobs, and the economy. Talking of jobs, while we await the more closely watched non-farm payrolls release on Friday, which includes the public sector data, we did get the ADP private sector data for April, where we saw private payrolls increased at a faster than expected pace, adding 192,000 workers for the month, also higher than the consensus outlook for 183,000, though under the upwardly revised 208,000 jobs in March. The indications are that the US labor market remains strong. Also, the wage growth measure was up 5% from a year ago. That's a multi-year low, providing welcome news on reduced pressures on prices. Still on data, UK house prices fell unexpectedly for the second month in a row in April, reflecting the recent rise in mortgage rates. House prices fell 0.4% between March and April, following a 0.2% drop in March. It was also the largest month-on-month contraction since August 2023. Before we look at the MPC closer, some other news. In Nigeria, the federal government has approved pay increases ranging from 25 to 35% for civil servants, which takes effect from January 1, 2024. We also get Nigeria April PMIs, that's tomorrow, and the latest inflation data will come out on the 15th of May. Higher wages will help improve consumer appetite and could stoke some economic growth, but will also add pressures to already record high inflation. We also replay our take on the news of Changpeng Zhao, former head of the largest crypto exchange Binance, who became the second major crypto mogul to be sent to prison, joining Sam Bankman-Fried behind bars. You will recall that Binance was also charged in Nigeria for tax evasion and other charges.
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress, and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
No material change in the last FOMC statement. The committee has decided to maintain the target range at 5.25% to 5.5%. That's the federal funds rate. There are two sentences that will be further interrogated. First, quote, in recent months, there has been a lack of further progress towards the committee's 2% inflation objective, unquote. This suggests we shouldn't, of course, expect rate cuts soon, and could be a preparation for a long wait as far as bringing down rates is concerned. The second sentence, beginning, quote, it says, beginning in June, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $60 billion to $25 billion. This means curtailing or tapering the reduction of the balance sheet, which has the effect of a rate cut and shoring up liquidity, and that could also boost sentiment. Friday's non-farm payrolls is the first input into that data-dependent process. I still sense a more hawkish Fed, and higher rates for longer definitely means higher costs for sovereign borrowers tapping into global markets. Changpeng Zhao, known as CZ, the former chief executive of Binance, was sentenced yesterday to 4 months in prison after pleading guilty to violating U.S. laws against money laundering. This is the world's largest cryptocurrency exchange. Also, after Sam Bankman-Fried becomes the second major crypto boss to be sentenced to jail. Ethics and culture tends to be overlooked in much of business thinking these days, but the new normal presents a more alert regulator, and larger companies will become more vulnerable to scrutiny, especially when financial success in less regulated sectors begin to raise more red flags. Companies can no more be casual about ethics. They need deliberate structures and explicit value statements that makes clear what they can do or what they do not do. It's no more okay to say we are not breaking any law, but the litmus test has to be if regulators knew all about our operations, are there aspects they will be uncomfortable with? Ethics is not just about fair competition and prices in the market. It's also about treating employees fairly, having fair compensation practices, paying suppliers as due. It's also about doing it right, beyond doing the right things. Some major ethical scandals have drawn fresh attention to the theme of ethics. Carlos Ghosn went from corporate high flyer to zero in days. Sam Bankman-Fried, who was seen as the icon for the new smart young disruptor movement, was exposed as a crook and now CZ. Even when you try to pay attention to doing it right, there can be missteps that can prove fatal to businesses. Talk less of if you do not have any structures or formal ethical standards or processes in place. The best practice is to formally integrate ethics into every aspect of the company culture, both informally and formally, from recruitment, induction, and onboarding, ensuring ethics-related issues are well covered and values clearly outlined in the onboarding process. This means offering job-specific ethics training, providing role-specific ethical manuals, also making ethical conduct a regular part of performance reviews and human capital management, appropriately reinforcing and incentivizing ethical behavior. The C-suite must see ethics as absolutely key. The new young founder genius, not curbed by a strong ethical compass, can take off on a dangerous tangent. Standards should spell out zero tolerance for infractions like bribery, misrepresentation, money laundering and harassment, mistreatment of employees, cooking the books, mistreating suppliers and even customers, but also against taking advantage of loopholes in weaker regulatory environments, doing side deals with politicians, having policies on limits to contributions to political parties, and lobbying to push an agenda to influence decisions or approvals definitely should be no and should be clearly articulated as things that the company will not do. Gifts should be capped. Accepting or making payments to directly or indirectly influence current or future decisions of government officials, definitely not. Most things done in an opaque manner that cannot be openly exposed may appear to help profits, but these things tend to come back to haunt your operations. In emerging economies, it can be tougher. There is a deceptive sense of an open, everything goes terrain, but regulators are getting much more vigilant. One hopes 4 months will teach CZ the lesson that needs to be learned. London's FTSE 100 index ended 0.3% lower, extending earlier losses, while most European markets are closed for the May Day, Labor Day public holiday. Oil prices plunged to $83.56 as we speak, down 3.19% for Brent Standard as geopolitical risk premium fades. It's about 7:30, that's 1930 GMT. The initial reaction after the FOMC decision in US markets was an upward movement more into positive territory as the Fed communicated a slowing in the pace of runoffs in Treasury securities and said the next move is unlikely to be a rate hike. As we speak, Russell 2000 up 1.93%, Nasdaq up 1.52%, Dow 30 up 1.33%, S&P 500 up 1.06%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.